Hello everyone and welcome to my channel. This is Random Guy on YouTube. Today I would like to talk about Fiverr International. For those who have never heard of Fiverr, here is a short explanation of their business model. In essence, Fiverr is a marketplace for professional freelancers to make their services available and accessible to businesses. The services offered on Fiverr are diverse and range from designing business cards to helping with HTML or JavaScript. The highest paying jobs on Fiverr include web design, social media manager, proofreading and copywriting, and resume writing. A service offered on Fiverr is called a gig. The service seller sets the initial price for a gig. After the payment is made, Fiverr charges 20% of the fees as a commission. Fiverr is based in Israel but operates worldwide. It is a small-cap company with barely $1 billion of market capitalization, and it is listed on New York Stock Exchange under the ticker symbol FVRR. I've been introduced to this investment idea by a YouTuber, Sasha Yanshin. And what can I say? I got convinced. I'll link his original video in the description. So, Fiverr publishes this chart every quarter, and the chart captures how much revenue Fiverr gets in time from each cohort as a ratio to initial performance marketing investment. In this context, a cohort is a group of users who signed up for a service during one quarter. So, for example, the Q2 2023 cohort earned Fiverr revenue of 0.98 times the initial marketing spend, and the Q2 2022 cohort earned 1.05 times the marketing spent in the initial quarter, but the same cohort earned in total 3.88 times the initial marketing investment during the last 2 years. If I would like to know what the Q2 2022 cohort earned in the last quarter, I would have to subtract these two levels. This graph is nice and all, but Fiverr doesn't publish the raw data. So, if we want to use this data for further analysis, we have to resort to pixel counting. This is what Sasha did, and to actually recreate and potentially expand his analysis, I guess I would have to do the same.
One eternity later.
So I did it, and this is what I got. Each column here is a separate cohort, and as you go down in the column, you can see the revenue earned by that cohort in each quarter. If we look at the data diagonally to compare actually comparable numbers, we can see that there was some slowdown, but in the last year, quality of new cohorts improved quite a bit. If we put all the data together, this is how the average cohort performs in time, which could be great information to have for further analysis. The revenue earned in the first quarter is on average 0.96 times initial performance marketing investment. This time, new revenue earned by the same cohort falls more and more, but it bottoms in the 8th quarter and starts going up again. This is absolutely amazing for Fiverr and shows how sticky this business model is. Data end in the 23rd quarter, and after that, to be on the safe side, I am projecting a slow decline. In fact, I designed a mathematical function to capture the performance in time, which is obviously a bit of a overkill, but let me show you anyway. So great, now we can see revenue spent by an average cohort in time as a ratio of initial performance marketing investment. But what the hell is performance marketing investment, and how big part of the total marketing spend is it? Fiverr does not publish it anywhere. In the original video, Sasha came to the conclusion that the performance marketing is about 65% of the total marketing budget. I did my own analysis and I respectfully disagree. Fiverr publishes a chart like this each year, which captures how much revenue was brought by each cohort in a given year. I guess it is time for pixel counting again. So here are the results from the last 4 years. I did some complicated magic with the numbers, which was not easy since these are not separated into quarters. And I came to the conclusion that in the last 5 years it has been on average 57% of the total marketing expense, and I project similar numbers going forward. Perhaps I am a bit off, but I don't see how could 65% work with the rest of the data. With all this information, we can finally move on to some revenue projections. Here is a quarterly and yearly revenue. Fiverr pulled some customers forward during the pandemic, and then there was a cool-off period when the economy reopened. There was also some broader economic slowdown recently, and Fiverr reduced marketing expenses to make it sooner to profitability. All these factors caused the evident slowdown in the revenue growth. Even then, the compounded annual growth rate was almost 38% in the last 5 years. Here are my future projections in orange, based on data I already presented. For comparison, the management expects $89.5 to $92.5 million in revenue in Q3 and $358 to $365 million in the whole fiscal year of 2023. So my expectations are on the higher end of that range. And here are my projections far into the future. Oh god, this looks so ridiculous. Now let's move on to margins. The gross margin consistently hovers above 80%, which is excellent, and I don't think this will change much in the future. Operating margin is negative, and this is because the company is reinvesting all the free cash flow back into the business, into marketing to grow the number of customers as much as possible. But because of the problems in the broader economy, the management decided they should more focus on profitability and started aggressive cost cutting. I think this company's growth curve is far from over, and after some stabilization and improvement in economic conditions, I expect the marketing spending to pick up again. Based on my models, this will keep the operating margin in low positive numbers, and major improvement in profitability may happen later, starting in late 2026. Now here are the earnings. I decided to show both GAAP and non-GAAP earnings because there is a significant difference between them. It is mainly caused by stock compensation. I am not opposed to stock compensation at all. It is a good motivation for the employees, and it is good to know that the goals of management and shareholders are aligned. With that being said, it is a real expense, and in my opinion, it shouldn't be just added back to earnings to make them look better. The GAAP earnings moved into the positive territory in the last quarter, and hopefully it will stay that way while the growth reaccelerates. Here are my earnings projections, but it has to be said that they are highly uncertain. Depends how much will Fiverr cut costs and how much will reinvest into the business. Non-operating profits or expenses can also move the needle. This stock used to be one of the high flyers during COVID lockdowns in 2020 and 2021 when the stock price reached over $300 per share. When the lockdowns ended, everyone stopped believing in this company and the share price collapsed. Then, more recently, there has been another wave of negativity because of the fear that artificial intelligence will screw over Fiverr's business model. However, nothing suggests this will happen. So far, it has been only a benefit for the company, and management is quite optimistic about AI implementation in their business. If you think about it, AI is a great tool for freelancers, but it does not operate independently without human intervention, so there will always be freelancers in my opinion. Anyway, I plugged my 10 years earnings estimates into a discounted earnings model and came to fair value of $64.58 per share, while the current price is only $24.59. My assumptions were 20% discount rate and terminal price-to-earnings ratio of 24.5. This valuation is based on earnings very far into the future, so it is very uncertain. Now let's take a quick look at the balance sheet. There is a significant amount of long-term and short-term debt, but when you look at the pile of cash they have, I think they are just fine. Fiverr is a growth stock with compounded annual revenue growth rate of 38% in the last 5 years. The growth has slowed down, but management expects reacceleration in Q3 and Q4 2023. The company approaches profitability by cutting expenses. Q2 was already slightly profitable. My fair value price is around $65. However, this is based on earnings far into the future. Fiverr has a solid balance sheet. At this time, I usually talk about my portfolio, but I don't really feel like it since I'm getting a heavy beating right now. Well, here are at least my recent buys. Last week, I added $100 of Fiverr into my portfolio at the price of $24.47, and this week, I bought more shares of JD at the price of $29.61. I am just a random guy on YouTube, and this is not a financial advice. Do your own research and keep safe. See you next time.